Here's a summary of Rivian's Q1 2026 earnings call, focusing on key details for an audible presentation. Introduction and executive overview. Good afternoon, and thank you for joining Rivian's first quarter 2026 earnings call. We're here today to discuss our progress and financial results. CEO's key statements. Scaringe, our CEO, Scaringe, kicked off the call with significant enthusiasm regarding the start of saleable R2 production at our Normal, Illinois plant. He emphasized that R2 is a game-changer for Rivian, designed to be an attractively priced option in the popular 5-passenger SUV and crossover segment, bringing Rivian's signature design, performance, and technology to a much broader audience. Key to R2's success is its significantly reduced cost structure. RJ highlighted that R2's bill of materials, BM, is expected to be approximately half of the R1 platform, with non-BM costs of goods sold reduced by over 50% through design for manufacturing and leveraging fixed cost efficiencies with higher volumes. This focus on structural cost reductions is crucial for profitably delivering R2 at scale. He also announced a strategic decision to increase the production capacity for the first phase of our Georgia plant by 50% to 300,000 units annually for the mid-sized vehicle platform, aiming for improved cost efficiency and supporting job growth. Production in Georgia remains on track for late 2028. On the technology front, RJ detailed progress on the Rivian Autonomy Processor, RAP1, and the upcoming Rivian Assistant, an AI-powered voice assistant. He reiterated the goal of rolling out point-to-point autonomy capabilities by the end of the year. In closing, RJ expressed immense excitement about Rivian's future, driven by the R2 launch, a category-defining brand, vertically integrated technology, and a direct-to-consumer model, positioning the company for a fully electric, autonomous, and AI-defined future. CFO's key statements. Claire McDonough, our Chief Financial Officer, provided the financial highlights for the quarter. Financial metrics. Q1 2026. Consolidated revenue, approximately $1.4 billion, an 11% increase year-over-year. Consolidated gross profit, $119 million. Gross margin, 9%. Adjusted EBITDA loss, $472 million, attributed to gross profit and increased operating expenses for R2 scaling and autonomy investments. Vehicle production, 10,236 vehicles. Vehicle deliveries, 10,365 vehicles. Automotive revenue, $908 million. Automotive gross profit loss, $62 million. This was impacted by a decrease in sales of automotive regulatory credits and lower production volumes, leading to increased depreciation and stock-based compensation. Software and services segment revenue, $473 million, a 49% year-over-year increase, with strong contributions from the Volkswagen Group joint venture, remarketing, and parts and service. Cash equivalents, and short-term investments, approximately $4.8 billion at the end of the quarter. Funding and liquidity. Claire highlighted significant expected capital for 2026, totaling $2.55 billion from strategic partners, including $1 billion received from Volkswagen Group and $300 million expected from Uber later this quarter. Further funding is anticipated later this year. A key development is the up to $4.5 billion loan from the U.S. Department of Energy for the Georgia plant expansion. This loan, combined with existing cash and expected partner investments, brings total available liquidity and expected capital in 2026 to nearly $8 billion. The company anticipates this combined capacity between Illinois and Georgia will provide a path to free cash flow positivity once fully ramped. Management's forecasts and guidance for future quarters. Full year 2026 deliveries, unchanged guidance of 62,000 to 67,000 total vehicles across R1, R2, and commercial vans. Q2 2026 deliveries, approximately 9,000 to 11,000 vehicles, with R2 deliveries expected to be back-half weighted. Automotive gross profit, while expecting year-over-year increase, Q2 and Q3 will be negatively impacted by the complexity of the R2 launch. The fourth quarter is expected to see benefits as production and deliveries ramp. 2026 adjusted EBITDA loss, maintained guidance of $1.8 billion to $2.1 billion. 2026 capital expenditures, maintained guidance of $1.95 billion to $2.05 billion, primarily for R2 production, sales/service infrastructure, and Georgia plant construction. Significant risk factors, macro and geopolitical factors, creating added complexity, cost, and uncertainty. Supply chain disruptions and elevated costs, ongoing focus on managing these risks. Commodity price fluctuations, specifically mentioned are increases in aluminum prices, though proactive sourcing strategies are in place. Tariffs, potential for future reimbursement of IEEPA tariffs, currently considered within the existing outlook. Key highlights from the call: successful start of saleable R2 production and initial employee deliveries. Significant cost reductions achieved for R2. Increased capacity at the Georgia plant. New strategic partnership with Uber to accelerate autonomous vehicle goals. Progress on RAP1 chip development and autonomy feature rollout. Launch of Rivian Assistant, AI-powered voice assistant. Strong growth in the software and services segment. Significant capital infusions expected from strategic partners and the DOE. Resilience demonstrated after the normal factory tornado damage. Key lowlights/challenges mentioned. Automotive gross profit expected to be negatively impacted in Q2 and Q3 due to the R2 launch complexity and new vehicle ramp. Supply chain volatility and elevated costs remain ongoing challenges. Important statements from management. R.J. Scaringe, CO. I believe the R2 will be a game changer for our customers and will be a key driver of our company's long-term growth and profitability. And with our category-defining brand, the launch of R2, which is our first mass-market vehicle, vertically integrated and extensible technology, and the direct-to-consumer sales model, I couldn't be more excited about the opportunity ahead for our customers and for our business. Claire McDonough, CFO. Delivering a strong 2026 exit rate for R2 production and deliveries is a key focus for our team, as we believe it will directly translate into positive automotive gross profit for the business. And this brings total available liquidity and expected capital in 2026 of nearly $8 billion. This concludes our summary of Rivian's first quarter 2026 earnings call. We are optimistic about the path forward, driven by innovation, strategic partnerships, and the successful launch of our R2 vehicle.